Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Insights. Well, we've set a new record. This year, 2016, is officially the worst start ever in our stock markets. And there's some key things from CNN Money this past week that I think really we should pay heed to, we should pay attention to. And I want to give you some solutions. And that first, I think, key point is understand not to panic. Our clients haven't lost a penny by using a safe indexing solution that I talk about on Hidden Wealth Radio. And here's why I think these things are important. And there's no specific order, but I think CNN Money really hit home. And this is going to be a really short to the point insight with a call to action that I think will either give you more education or give you more peace of mind by learning what you can do to protect yourself. Stocks off to the worst start of record. We're down 5.2% on the year and falling, obviously 5% plus. Stocks in China, on the other hand, are crashing. The Shanghai Composite has plunged more than 12%. And these circuit breakers, which they just repealed, they just put these in late in last year, I think, sensing what was coming with the slowdown of lack of consumption in the country, the second largest economy in the world being China. Trading was halted twice this past week through Thursday, and the timeout concept has caused even more panic. And so now that the regulators have backtracked and removed these circuit breakers. Now we have these same circuit breakers here, but our levels are basically 7%, right around 13%, and then 20%, and then the market shuts down completely. I don't think we're going to avoid seeing that, unfortunately, but I hope that's not the case. Europe's getting crushed too. Germany's down 7%. France and the UK are also both down 5% plus. China's losing its economic mojo, the article said, because what happens is when the second largest economy starts to crash, it sends a ripple effect around the global economy. And unfortunately, the slowdowns are reported to continue. China, as you know, this past late summer devalued their currency, and that's when our S&P 500 in 30 days lost almost 7% in that 1 month period. But what happens is it's a way for them to try to boost their exports. But the problem is it also causes money to leave that country that's devaluing its currency, which is clearly what's happening now. Oil is putting people into a panic and frenzy. So crude oil, is now down to $32. In fact, it dipped under $32 per barrel this week, which is the lowest it's been in 12 years, a little over a decade. On the geopolitical front, which is also causing a lot of people heartburn, you've got now war breaking out between Saudi Arabia and Iran. But on top of that, unfortunately, North Korea is bragging about being successful in the completion of their hydrogen bomb. Then you've got influential investors like George Soros coming out this past week and saying that this is a close, reflection of exactly the 2008 financial crisis. And then lastly, stocks now are officially in a correction mode. We've dropped almost 2,000 points from the Dow hitting around an 18,000, almost 300 and some odd point high last May 19th to now being down to around 16,500. Folks, we've dropped 2,000 points. Some of the economists I've been teaching you are predicting another 10,000 points to go, actually seeing the Dow drop down to somewhere between 4,000 to 6,000. But there's things that you can do. You can get protected. Now, our clients, as I said, haven't lost a penny because they've learned, as one client I just met with this last week said, listen, I've subscribed to every newsletter known to mankind. I trade an account, I've had brokerage accounts, and I never even knew these safe indexing strategies and solutions in safe saving vehicles even worked or even existed, and even what they were. In fact, he had a relative of his who's been in our business for a decade and a half almost, who was not familiar with the actual structure, the entire structure of these things. I want to teach you, and I want to provide two opportunities. The first one is simple. If you want to learn more, I'm going to be teaching my wealth protection webinar, and I think now is an opportune time to get really serious. I've been predicting this now for about 2 years, and you can go to solvemyretirement.com would be the first place to go. That'll be the easiest. Solvemyretirement.com. That's solvemyretirement.com. Or you can simply call 855-668 2928. That's 855 668 2928. Now, for those of you that you know that you want to have an analysis of protecting your retirement, almost like you'd get a second opinion on your health, why wouldn't you get a second opinion on your wealth, especially to protect it? Simply call our office and ask for Debbie. Debbie is who schedules our certified wealth architects and our authorized wealth architects, and you can reach us toll free at 800 825 1766. 800 825 1766. If you get voicemail, if it's after hours or before hours, depending on your time zone, we work with clients all over the country. We meet with people remotely, we meet with people wherever we need to meet with them. Just be patient, but be very specific on your time zone, the best time to reach you back and the best number, and then spell any unique names, last names, or even first names for that matter. Folks, it's here. We're not looking at a correction, we're now in a correction. And if you're looking for market correction protection, just like our clients have, and they've weathered the 2000, 2001, 2002, the 2008s, the 2009s, and even the 2011s, and we are in for a lesser consumption age demographic that's going to force this volatility to get like a roller coaster, a lot bumpier. Here's to you finding your hidden wealth protection.